Well, the housing collapse is occurring as expected. And we're going to go over some of the details that I've uncovered in the last day or so. And just remind you that what we're talking about here was predicted, and it actually provides a lot of opportunity if you can look through the chaos. What am I talking about? Well, if you've been paying attention on the channel, I indicated over the last couple of years that a couple of things would happen. First, days on market would explode. They would go higher. More importantly, because the move-up buyer is not involved, turnover would collapse, right? The average turnover would actually expand from 8 years to perhaps 12, perhaps even 14 or 15 years when this cycle is all done. And then the last one was that expired or canceled listings would explode. And that's what I uncovered yesterday. A record number of homes were withdrawn from the active inventory in December. In fact, 73,000 homes were delisted in December. Now, why would a home be delisted? Well, lots of reasons. They predominantly come down to the seller is not getting the price that they wanted. Remember, as we were going through this cycle, I was very focused on who wants to sell and who needs to sell. A want to seller will sign a listing agreement. They will, seemingly pull a price out of thin air, and they will just let it sit there until the listing expires. And that is what occurred in December. Again, 73,000 homes. Folks, for comparison's sakes, that is the highest in the last 9 years. On a year-over-year basis, that is a 64% increase. Last December, there were 44,500. This is exactly how you have the last hard year in real estate. What's going to happen in 2025? My expectation is if you need to sell, you're at the market's mercy. If you want to sell, as was apparent in December, you just simply take your house off the market and you wait for better days. Again, I think better days are coming. I think they get better in 26 and 27 and 28. But yes, if you need to sell, you are going to get what I often call disrespectful offers. Again, folks, your job as a real estate investor is to make your money when you purchase. Your job is to make sure any asset you buy cash flows day one. 30-year fixed rate financing. We don't bet on appreciation. You should be understanding what the days on market are in your buy box. You should set some criteria at 50 to 100% above that. So, for example, if your buy box is 19 days, maybe at 35, you start writing disrespectful offers. And again, as has been apparent for the last 6 months, and we've celebrated many successes on this channel, you're not supposed to get a yes answer the first time. Your job is to write offers, follow up, write more offers, follow up, write more offers, follow up. Most of you, myself included, we just need one deal a year. So we're not in a rush. We don't need the first offer to be accepted. We want the best deal. So again, the housing market is going as expected. 2025 is going to be the last hard year, and things get better in 26. To that end, we also got U.S. new home sales, just to show you what a disaster this was. Last month, we sold 734,000 new homes. Expectations was for that to come down to 680,000. In reality, it came in at a very disappointing 657,000. Folks, it was forecasted to fall 2.6%. It actually fell 10.5%. How can that be? Very simple. Rates matter. Rates matter. Also, we have seen for a long time that home builders are willing to buy down rates. However, it doesn't matter if the consumer is scared. We have been talking about for the last 2 weeks that given consumer confidence, given inflation expectations, that the consumer is starting to pull back. Again, if you are shopping for a home and you are nervous about your job, you are not writing an offer. And if you did, you would cancel it. You would get out of that offer as soon as possible. On a pricing front, just in case you are curious, new home prices are up 3.7% year on year. They were $430K last year. They are now $446. I'm rounding these numbers to the nearest thousand. So again, the real estate market thus far is acting exactly as expected. 2025 will go down as a tough year, especially when you look at transactions. But again, a slow year for transaction is actually a great year for real estate investors. Because again, all we have to do is find that motivated seller, which we all know is out there. They're always out there. And the good news is when you have 73,000 less homes to look at, again, that was how many homes were delisted in December, the percentage of motivated sellers go up. So when you start to remove want to sell, you are left with need to sell. And that is where we find ourselves increasingly going forward. So while it may be true that 2025 is going to be a pretty rough year for transactions, I hope if you're a real estate investor, you realize what's ahead of you. A lot of work, but also great opportunity. Treasury Secretary Scott Bessent is out speaking the quiet part out loud. Scott Bessent yesterday said, America's private sector is in recession, full stop. Again, we've talked on this channel plenty of times that the macro U.S. numbers are positive, that at the macro, we are not in a recession. But folks, hopefully it is clear by now that is because of a runaway government spending. It is clearly government spending that has kept us out of a recession, and it appears that that party is over. Again, Scott Bessent, America's private sector is in recession. I do want to let you know about our wonderful school community. Again, I want to shout out Tom. Tom joined yesterday. But again, folks, I want to remind you we have 6 different accountability groups. In fact, today at 8 a.m., so 23 minutes, the ladies of ORAT take center stage. If you are a female or woman interested in real estate investing, we have your group. We have your mastermind with the ladies of ORAT kicking off at 8 a.m. Pacific. And if you'd rather do something in the evening, great option. You have a 6 p.m. weekly accountability call this afternoon or this evening. Again, all times Pacific. This is something that is pretty wonderful, something I am proud of, that we have 6 different accountability groups, none of which I join, but are run by people I know and respect. And I thank them for giving up an hour or more each and every week. So thank you for that. Again, part of being successful in real estate is getting around the right group. And I am busting my tail to provide you with the right group on school. Hopefully you appreciate that. Not only did we get new home sales disappointment, but we also got U.S. mortgage applications disappointment. Again, this is a weekly number. It comes out every Wednesday. Mortgage applications are down 1.2%. These are week-on-week numbers. It is interesting to me. I don't know if you guys have been paying attention, but the 10-year note has collapsed. The 10-year note, I think it was 3 weeks ago, was 4.8. As of this morning, it's 4.3. That is a 50 basis point move. However, we have not seen that yet in mortgage. Mortgages were roughly 7.1. They are now roughly 6.8. So there's another 20 basis points in rates that could come down. It will be interesting to see where this is going. I think the 10-year note is clearly saying a recession or a slowdown is coming. We could have a snapback on rates. We don't know. Again, Friday, we get the large PCE number. It is expected to collapse. We shall see. But yes, it does look like rates are coming in under 7%. My call for an average of 7% for the year is looking a little bit shaky, but I won't change it on you because I believe in staying true to my calls. And if I'm wrong, I admit it. I'm wrong all the time. Morgan Stanley also saying the quiet part out loud. 2026, next year, will be the year the economy picks up. That is my belief as well. Again, I think we are going through the chaos, the noise. There's just a lot of cross currents in the economy here in 2025 that probably don't get better for a while. But as we get to 2026 and 27 and 28, we will start flexing our muscle and the economy will start growing. We did get some earnings that are interesting to talk about. TJ Maxx had a strong Q4, but actually gave some weak guidance. TJ Maxx actually highlighted that the strong dollar is going to hurt earnings as they repatriate dollars from around the world. Lowe's, right, Home Depot competitor, beat top line, beat bottom line, but issued a cautious guidance. Makes total sense. Housing's going to suck in 2025. And then First Solar actually beat on revenue, but missed on earnings. They actually highlighted margin pressure because of raw material volatility. On top of that, we got Workday. Workday beat top line, bottom line. The CEO highlighted that AI is front and center to all customer and prospect interactions. We did get some Fed speak. We got Fed President Barkin. The Fed layoff may be a big deal regionally, but it will not impact the national economy. Small business confidence has been up. Business and consumer confidence matter a lot. Again, highlighting, pay attention. We will take a wait-and-see approach about how policy changes impact the economy. Again, I think we are starting to hear the Fed clearly say, we're going to wait and see what's real. We won't overreact early. And then the last thing Fed President Barkin said is expect PCE to show further decline. The Fed is clearly pointing at Friday saying that it is coming down. Fed President Goolsbee said, before the Fed can go back to cutting rates, we need more clarity on inflation. I do want to highlight Scott Trench, the CEO of BiggerPockets. Yes, folks, we had the CEO of BiggerPockets back on the channel yesterday. I want to thank Scott and his entire team for letting that happen. Scott and I talked about how new investors struggle to get started. We talk about the things that I have seen, that he has seen. Again, it was a wonderful conversation. It went live yesterday at 4:00. If you want to see clear as day that BiggerPockets and Scott Trench, the CEO, are aiming to help new real estate investors, I would advise taking a look at that. Last thing to talk about, Toll Brothers CEO highlighted that 70+% of their business. Remember, Toll Brothers is high end. I think they reported last week and said that the median price is like $930,000, something like crazy number. Anyways, the CEO said 70+% of our business is made up of move up or empty nesters. Again, AKA these are people with gobs of equity that are looking to move into a new community and a new home. So again, that's what they had to say. So again, folks, hope you have an amazing day. This is the Daily Financial News. Do me a favor, join School. It is a community that you want to be a part of. 373 amazing folks, 67 cents a day. There is no better value, and you get thousands of dollars in education. You get mastermind groups. Why not become part of the family? Like, subscribe, comment, and go ahead and check out that interview with Scott Trench, the CEO of BiggerPockets. Later.